stocks and Bitcoin are charging, and that's because the market's fear gauge has fallen to a 4-week low. So it's clear to see that the bulls are back in charge. My name is Jessica Amir, market strategist here with Mumu. It's great to have your company this 24th day of April. US stocks posted back-to-back gains of 2%. We've now seen the world's biggest ETF, the SPY, that tracks the S&P 500. It's gained $20 billion in just a few days. If we even think about Bitcoin, that's moved up markedly. It's risen 7% in just 2 days. The Bitcoin price is back above $93,000 for the first time in 7 weeks. And the world's biggest holder of Bitcoin via an instrument that is the ETF, the IBIT Bitcoin ETF, that's run by BlackRock, that has gained $10 billion in value in just a matter of weeks. So it's quite outstanding. Meanwhile, the Aussie share market, its biggest ETF that tracks the ASX 200, it's now back being worth $18 billion again. It's just 3% away from its record all-time high value. Quite outstanding. So it's clear that the bulls are back in charge of markets, even though we do know, we heard overnight, we're not really sure about the timing of this US-China potential tariff deal being in sight. We're not really sure about that, but that's by the by. We are still seeing the market's fear gauge, which we track via the VIX. That has now fallen to an almost 4-week low. So this means now stocks can go back to focusing on what they're made of, and that is the companies that are growing their earnings and they're guiding for continued growth. Remember that the stock market is just a reflection of the health of the economy, and it's a reflection of the health of companies. And indeed, we are seeing that the strength of the US average company is far better than expected. So far, this US earnings season, 25% of the S&P 500 companies have reported. That's about 127 of the 500 companies have reported so far, and they've delivered far better than expected results and outlooks. And this is a key theme that's playing out globally too. It's playing out in Australia as well. Companies are meeting and affirming their guidance, whether they're reaffirming their profits or revenue, they're being rewarded with strong share price moves. And perhaps that can be said for what we saw yesterday on the ASX. Telix is a standout. Telix reported a 63% jump in their revenue, and they said, hey, our full year guidance is on track. They reaffirmed that, and perhaps that's why, again, speaking to that notion that the market is really rejoicing, and anyone who is hearing that a company is affirming their guidance and saying what they're set out to achieve, their shares are rallying. So that's why their shares are now just about 10% away from their all-time record high. What about the Australian election? I can hear you ask. Well, it's just 9 days away. The Australian Labor Party says it will create a critical minerals reserve if it wins the election. So keep a watchful eye on the world's biggest rare earths companies. One of those is listed down under on the ASX, Lynas Rare Earths, LYC, and its shares have been doing quite well of late. Meanwhile, on the other spectrum, just be mindful that uranium companies are on the nose. I guess you could say maybe they're dying a painful death, not only after Donald Trump walked away from clean energy plans, but we are also seeing the Liberal Party, the market believes that they won't win the election, and perhaps that's why uranium companies are on the nose. But regardless, the market does like good news in these very uncertain times. So Paladin Energy yesterday was a standout. Their shares jumped 24%, springing to life. Their shares are still trading around record lows, you could say. But the company did say, yes, tariffs are not materially impacting our bottom line. So the market liked hearing that. Meanwhile, the market also liked hearing that they actually achieved record production at their mine, the Langer Heinrich mine in Namibia. It's also worthwhile pointing out the world's biggest uranium ETF is down off its highs. That's the URA ETF. That is worth watching. But here's a final thought. Remember that we're just 95 days into Donald Trump's second term, and perhaps we need to remember that as quick as gains can come, they can vanish. So consider maybe trimming your wins if that's something that is important to you. And secondly, focus on quality companies. They're the ones who are staying on higher ground. And what is a quality company? Well, remember, it's a company with high repeatable cash flows. And we also do know that companies upgrading their outlooks, they're weathering the storm. So there's plenty to consider. Have a safe and happy long weekend. We'll be back on Tuesday.